Thank you, guys. Thank you for joining. What we'll do is, as I said, we will cover the market outlook in terms of how the macros are looking like. I will ask Neeraj to maybe start, and then we will cover some data which we have, which we collated, which Namneet and Aditya have done, and then we will discuss some investment ideas, and then take a lot of Q&A. We will take questions, so we will. I have got a lot of requests already. I would just ask you to be patient, and we will try and address as many queries as possible in the second half. So keep dropping in DM also in case you have any queries. So guys, so Neeraj, thank you for agreeing on a short notice to join us, and it's always a pleasure speaking to you. This time, I think the chairs have turned, the tables. Maybe I'm asking you this time to start. It's usually the other way. So why don't you just take us through in terms of, since you track markets closely, you meet various market experts, hear their commentary. Why didn't you just give us a bit of a perspective on markets and what and in your personal capacity? Yeah.
Gurmeet, he's not there.
I think there is some problem. I'm sending a request again.
Yeah, yeah.
Okay, Neeraj, you are there.
Yeah, hi.
Yeah, hi
Good
Neeraj.
evening.
Thank you.
Good evening, Gurmeet. Good evening, Shitesh.
Good evening, Neeraj. Thank you for
Not at
joining
all.
us on this. Thank you. Yeah.
So Neeraj, I was saying thank you for joining us. We thought we'll start with you in terms, since you meet so many market veterans, you interact with foreign brokerages. Why? So tables have slightly turned. Let me ask you a few things. What are you feeling about markets?
Yeah, I guess a very strong bear case and or a very strong bear argument, but a contra bull argument as well. Let me start with the bull argument. Yes, if you're not bullish, you can't make money, I guess. So I mean, the bull argument might be that the concerns on rates and inflation, which have gained prominence and have been selectively disruptive for the markets at large, are there. But a quarter of the market does believe that these concerns and inflation, higher rates, etc., might be transitory. Policy actions, maybe a slowdown in growth, etc., will all bring, and maybe a base effect will bring inflation back within a bearable range. And maybe that is the optimistic view, which is a very narrow quarter. I think the bearish view, almost everybody knows this high inflation above the comfort zone of the central banks, and they're finally not thinking of equities but about inflation. No Fed put, and their actions bring about a disruption in a party which has not been witnessed before, right? I was talking to Devina Mehra today, and she made this point that within the living careers of most people who are there in the markets right now in the Western world, they have never seen such a scenario wherein inflation has been at the level that it has been, right? And I think the central banks have also run out of tools, namely QE, to handle this. So maybe the extent of pain is unknown. So I think, I mean, my simple point is that we are not in a trending market, we are not in a trending economy scenario, and we are not in a trending earnings picture either. And therefore, in light of all of that, if the globe were to slow down, can people bet that India will really do well and will earnings really pick up? I think that's the logical bear argument, and maybe an argument which has got more weightage currently.
Yep. Yeah. So Neeraj, also, so since you mentioned, I think I agree with you that a lot of us, most of us probably, and especially seeing 7-8% inflation in US, Europe is something which is new for all of us. Also, I think it's much stickier and not transient at what everybody coined the term last
Mm.
year. Uh, so how much is it in the price? I mean, so if you look at the, while I'll ask Navneet to cover the cell numbers, etc., how much do you think is in the price? Let's say if I were to, just ask you your view. I mean, uh, and what are the pockets, let's say, which you think probably where probably it's reflecting a lot in the price, if not in the entire market?
हाँ मतलब entire market तो difficult to say. I mean, entire market, just simply if you just put out the numbers per se, and the numbers that we are trading at currently versus where we could be, right? So I mean, frankly, just think of where we are, maybe about 18, 19 times 1 year forward, and we've traded at about, in normal times 16 to 18 times as well, and in tough phases maybe even 14, 15 times too. So the possibilities of downside from where we are right now remain high, simply because of the fact that there's a bit of an unknown. The withdrawal of QE coupled with central banks being so gloomy on the inflation outlook and therefore raising rates. So difficult to pencil um, the extent of the downside. Just that because it's a bit of an unknown, the risk of factors might stay high, and individual pockets. I mean, difficult actually is something that Gurmeet you should be answering, because that's something that I usually do asking you. But yeah, based on my conversations with most people, I think the anti-consensus view seems to be IT, because while everybody is bearish on and thinking of a US recession and therefore what it could do to client budgets for IT services companies, the overarching view, also, the one view is also that the rupee depreciation as well as stickier order flows, at least for the next couple of years, might bring the life back into this pocket. That's the view that I heard from 2 or 3 people in the recent past, except for Neelkat Mishra, who wrote a very slightly sticky note today, right, on why he believes IT and materials will not do well.
Sure. Yeah, yeah. I mean, lot of contrarian calls coming. You know, very clearly. So, what to watch out for, Neeraj? Let's say if there is, since there are a lot of people who have joined us, almost 500 plus. As an investor, as a retail investor, any key things to watch out in terms of data, in terms of high frequency data, in terms of any rate? Is it's just the inflation number one needs to watch out for, or oil, or anything which you think could be maybe an event after which, let's say, we'll probably figure out what's the base or what's the bottom looking like.
Yeah, so I would reckon, Gurmeet, that the boring answer is that yes, the inflation number. Frankly, that comes off. It matters a bit to the commentary on the rates, if not the actual rates immediately from the Fed and the others. So, frankly, the boring answer is inflation. You could argue that, what could impact inflationary pressures and inflationary stresses could well be any kind of resolution to the conflict between Russia Ukraine, or as we hopefully we'll see some impact from this China opening up and maybe getting back to normalcy numbers as well. But eventually, all of them kind of tie in with the inflationary numbers. And so as boring as it is, probably that is that one factor to watch out for, really.
No, I also agree. I think maybe if you see consecutive readings, 2 or 3 consecutive readings of inflation softening, some softening in ferrous, non-ferrous, and of course, oil. I think that could be one. So just hang in there, Neeraj.
Yeah.
I mean, thank you. It was a great opening, and I think so. I'll ask just Navneet to, if she can just give some throw some more data to what we discussed in terms of how much the market has come up, what's been the sell number, etc., and give us some perspective there. Navneet, are you there?
Hi, good evening, Gurmeet. Good evening, everyone. It feels like my whole family is there on Spaces right now. My current employers. Neeraj, good to have you.
Navneet, so good seeing
A,
you, and you are being missed
a
at BQ, I
friend,
must tell you.
a friend for a decade. Finally, I get to see you on Spaces. Lovely to have you here. And of course, I think my husband's also joined. Any which ways, I'll go on with the FI data is something which I want to start with. And I think this is something which has grabbed headlines for the last few months, especially after the index touched all-time highs in October 2021. So since then, we've seen a selling of nearly over 2 lakh crores till now. Now, this is surpassing, remember, 2008, which was global financial crisis, taper tantrums in 2013, or be it COVID, which was as recent as 2020. Now, this 2 lakh crore is almost 4 times the number we had seen the selling in 2008 GFC, which was around 53,000 crore. But besides that, let me just put a rosier picture to this. Everybody is asking how is the FI holding looking like vis-a-vis 2008 for Indian markets. I was just going through Twitter and I came across Mr. Ravi Dharamshi's tweet, who said that in 2008, FIs sold their holdings of 5.2%, and current holdings what they've sold is 4.2%. I don't know if there is more room for selling, but this number will definitely give you a sense of how much is left right now. And one report of NSE which came out in April, it said, the total the companies listed on National Stock Exchange, the FI holding of that is at 9-year low, which was sub 19%. So, which is telling you FIs have gone light on Indian equities. Vis-a-vis retail holding has gone up to 8%. This is for entire listed companies on National Stock Exchange, and that number is at 14-year high. So FI holding at 9-year low, and retail holding at 14-year high is what we are seeing. And I think that's visible. We've corrected just 11% from the top, 2 lakh crore. We would have seen more correction, but what has supported our markets is, the money which we've been receiving from domestic flows. Domestic savings to equities still remains on firm footing is what we've seen. We've seen numbers, positive figures coming month after month. So yeah, Gurmeet, this is on the FI front.
Sure.
But just a contrast to that, I wanted to add the participation in the derivatives market from FIs have also gone down. If you're looking selling on the cash side, there is also lesser participation on the derivative side.
Okay, so I'm just gathering what you're saying. You're saying, say, they sold more than 5% of their holdings in 2008 Lehman crisis, and they've sold 4.2% now. So that's like 80-90% in percentage terms. Obviously, quantum is obviously misleading because Indian markets have also become 3x of what they were in 2008. So, I mean, taking 2008, I'm not saying 2008 is obviously the benchmark for bottom. So, if you take maybe 80% selling in percentage terms, as that's huge. I think that's a big number, and sub 19%. I think the lowest, if I'm not wrong, Namni, they've gone is around 17% in 2000.
Correct. Yes, that is 17%. And, because of this light foreign allocation, now we know why there's a sell figure, inflation worries, rate hikes by different banks. But you know what? One more interesting data I came across in Bloomberg today. Is there an opportunity for increased allocation for Indian equities? So if you look at sovereign wealth funds, out of the total money they allocate to equities, only 1% is allocated to India. Pension funds hardly 0.1%, endowment funds hardly 0.5%. So this is just telling you whether there is scope for increasing the allocation when the cycle turns from here on. Considering, of course, we are valuation wise, as Neeraj was also mentioning, we are expensive, though we've corrected. Even if you take on trailing basis, at peak we were 26 times, now we are 20 to 21 times. But there's a reason why Indian markets have been given that valuation, and the reason is, the sort of EPS growth expectations that we are penciling in for Indian markets, and that's precisely the reason why it is expensive. For example, MSCI India is trading at 17 times 1 year forward, for which we are factoring an EPS growth of 16%. Compare that to MSCI Emerging Market Index, which is trading at 11 times. Of course, now compared it is a sharp premium for MSCI India, but we are only factoring in EPS growth of 6 to 6.5%. One interview I was reading of Mr. Rhythm Desai also, he said, I don't know whether we should be comparing now India to the other emerging market basket. And in fact, if you look at this premium, interestingly, compared it to S&P 500, India is just 15% premium. If you look at average last 10 years, it's stable. So not too expensive compared to S&P 500.
Okay, interesting. I think thanks, Navneet. Any data on leverage in terms of, I saw your interesting tweet on cash and FNO.
Yes, a very, very interesting take there. So I'll just give you like today's volume. If you see, Gurmeet, we did, let's say, roughly 45,000 crore of turnover in cash. Compare that to derivatives, we did around 60 lakh. So if I take derivatives to cash turnover, it's nearly 150 times. So I've been tracking this data for a while now. In last decade, the derivatives to cash turnover from being 11 times, we've surpassed the figure of 100 times now. Just to explain this in simple terms, if I'm trading 1 rupee in cash market, I'm trading over 100 rupee of that in derivatives. Of course, it's a notional turnover. Reason being 80 to 90% of the turnover comes from the option market, where the turnover is calculated not on premium but the underlying price. That's the reason, but that's the global way of calculating the turnover as well. And we are the highest globally in terms of the ratio.
Wow, that's quite a data. Yeah, so I think those ads of market sabka hai has been taken too seriously, I think.
Yeah, it also tells you maybe there is more of speculative trading which is taking place. One, I'll just add last point, Gurmeet here. So when I said FI exposure to FNO is also reducing, so in March 2019, if you looked at the derivative setup, 30% of the positions used to be with FIs, which is currently 17%, and retail has gone up to from 43 to 56%. So,
Wow.
well, retail participation going up in cash is there, but also in FNO, which can be a little bit tricky at times. SEBI has taken measures from their side by increasing lot sizes, increasing the margin, or even introducing physical settlement. But I don't think any of that has worked. The turnover has only gone up. In fact, in the last 3 months, markets have fallen. The cash turnover has gone down. That's a function of equity prices correcting and also some skepticism. But derivatives turnover in last 3 months has gone up compared to cash.
Super. I think that's a very very interesting insight. I think obviously FIs have lightened. Obviously after obviously selling what they have. I have not seen this kind of selling in my career in terms of quantum and markets holding up. In fact, I've been saying this point that had it not been for DIIs, I think we would have been at a much lower level. Anyways, thanks, Namit. Just hang in there. We'll get you once we take more Q&A. Aditya is with us. Aditya has recently joined us, so very happy to introduce him in Complete Circle family. Aditya picks up a lot of these trends. He reads a lot. He sometimes gives us a lot of complex. Aditya, what are you picking in terms of what are the some trends emerging? Any interesting trends? Any data you wanted to highlight?
Sure. So, first of all, a very good evening to all of you. Thank you, Gurmeet sir, for the introduction. Thrilled to be a part of your team, your family. Thanks, Navneet, and thanks, Neeraj sir, for that start. So, the number one trend, that I am seeing is the digital trend that is picking up in India. The words digital and India today are, similar. They can be used interchangeably. From in the past 5 7 years, India has leapfrogged in terms of fintech, digital. In fact, we have left a lot of countries behind, and so let me talk about the biggest fintech success story of India, right? So it is the UPI, Unified Payment Interface of India, and we should be extremely proud of the fact that a government entity, which is NPCI, created this product. When they launched it in August 16, right, there were just 21 banks that were live on it, and just 3 crores worth of transactions took place in the month of August 2016. Now, fast forward 5.5 years or 6 years today, in May 2022, there are 323 banks that are live on UPI, and the value of those transactions is 10 lakh crores. So it has been an amazing journey, and we have to give kudos to the government for doing this. You won't believe, Gumit sir, that today close to $1.5 trillion worth of transactions are taking place on the UPI platform every year. And we rarely hear about downtime on UPI, but on the flip side, we hear about how UPI is a success story and how a lot of other countries want to replicate the same model. Uh, along with UPI, of course, we have to talk about what really gave birth to UPI. It was a digital boom in India, the internet boom in India, and we all know whom to thank for it, Mr. Mukesh Ambani, of course. India consumes, so per user data consumption is the highest in the world by an Indian user. The cost of 1 GB of data is the cheapest in the world. So I still remember, 7 10 years back, we used to use 1 GB per month, right? We used to just use internet for 20 30 minutes. Those were crazy times, right? And today, we use 1 to 5 GB per day, right? Now, thanks to the cheap data boom, UPI came into picture. A lot of internet ventures came into picture. The Jandhan Aadhaar mobile stack, as we call it, came into picture. That led to the demat boom. Earlier it used to take a couple of days to open up your demat account, and today, thanks to Zerodha, you can open up a demat account in 15 minutes, right? I have opened a lot of demat accounts for my family members, and I got the ID password in just 20 25 minutes. So, of course, the biggest trend, sir, in India is the digital trend. It is giving birth to a lot of other ventures. You go to a vegetable vendor, you would see this UPI and Paytm UPI or Bharat QR codes. You go to a small shopkeeper, you would see Paytm or Pine Labs ka POS machines. You go to a Chroma, you would see Pine Labs POS machines again, wherein your loan will get approved in 15 minutes. So you don't even need to carry a wallet these days in India, right? And I speak to a lot of my friends who study in overseas countries or they're working there, and they say they always are proud of the fact that India is much, much, much ahead of them in digital payments and fintech. Yeah,
So Aditya, I think, and I think I remember you writing threads on some new age these fintechs during analyzing those IPOs. I still recollect.
yeah.
Anything you're picking on Capex? Anything So I was I was discussing with Neeraj also that. So I've been in wealth, and me and Kshitij were having a chat with some clients since we manage family offices. बहुत टाइम बाद थोड़ा कैपेक्स के साइन है. I don't know. It's very early to say, but whether it is cement, whether it is textile, whether it is pharma, we are seeing capacity addition announcement. Anything you're picking up there? Do you think that there's something to watch out there, or it's just that maybe high interest rates and maybe a subsequent demand slowdown could puncture this?
So I think the consumption story in India and the fintech story of India is here to stay. Of course, some of these companies will do extremely well. Some of them will become a part of M&A. We need to understand here that the fintech space in India is a bit different from the US fintech space because thanks to the regulatory moat over here in India, thanks to the RBI rules, I would say that these fintechs won't really compete with banks, but they will collaborate with them. So
Sure.
if you notice recently, we have seen a lot of M&A happening in this space, a lot of collaborations taking place between legacy banks and fintechs. They are getting into co-branded credit cards, debit cards. Banks have also started realizing that they are maybe lagging behind on the tech part or on the new things that these fintechs do. So they have come together and now they are collaborating. And it's of course good for the system where the customer wins, right? Now definitely when there's a company that's when there's a fintech that's offering really great deals and there's a bank who has amazing underwriting, they can come together and do some really amazing work together. So I believe it's a win-win for the system. And like I said, I'm definitely watching out this space. Capex ka again, a lot of fintechs are expanding. A few of them have IPO plans either here in India or the US, and they're gearing up to uh, go across pan India. For example, Pine Labs was planning their IPO. They want to expand their POS machines in majority of the retail consumer electronic stores. There were a few more fintechs that want to go for an IPO route through SPAC in the US. Now, of course, markets are jittery, so some of those plans will be on hold. But definitely, they are ambitious, and I'm watching the space. Yeah.
Perfect, perfect. I think I'll ask Shitish to probably step in here, and so we'll cover what are we looking at Complete Circle. I think it was some great data by all three speakers, guest speakers. We will discuss in terms of what are we looking at, what are the pockets we looking at in terms of gathering primary information when we meet clients and promoters, and also what we are trying to gauge. Shitish?
Yeah, Gurmeet. Am I audible?
Yeah, you are. Yeah,
Yeah,
please go
yeah.
ahead.
So I think it's a great start by Neeraj, Navneet, Aditya, and you. And a lot of data points, in fact, which I was also not privy to. It's very much there on the table. So yeah, so there are two broader spectrum. One is the obviously the wealth piece, which is basically
Shitish, there is some
understand.
noise in the background. Shitish?
Uh, Noise in the background. Give me a second. Is it better now?
Yeah, much better, much better. Please go ahead.
So I'm saying, so basically there are two set of recommendations that we are engaging with clients. One is on the wealth side, where the broader theme is that how we can balance as per the asset allocation of the client. And when you, me, all our colleagues are going and meeting clients, after almost a gap of 11, 12 years, we're talking about capex, we're talking about expansions, we're talking about stepping up the heat in terms of investing into various other asset class, else and equity and debt, and that is very much evident. So yes, we keep on talking about the concept of PE expansion or earning expansion. So 2020 was the year of PE expansion, and this is the year of PE contraction, but earning expansion. Seems like things are good. Yes, I echo with what Neeraj is saying, but I somehow feel that it can be a really good situation for India, where a high inflation plus your high growth, it can actually And I would wish that it should turn out to be a good 13-14% nominal GDP is what I'm looking at. But yes, when it comes to client, after a couple of years, we have seen that down. There is some substantial return one can make on the fixed income side also, which was not there. But yes, cover is almost flat from 5 to 10 years bracket, and today you saw that 10 years touching 750. With inflation and your long term capital gain benefit, you can actually look at almost tax free 720, which on any HNI tax bracket basis, it is 11% pre-tax, which is a very good proposition as on date. Then on the equity side, I think uh, what we are looking at is that let's go a little slow and staggering investment over a period of time. Let's say 3 to 4 months, which is on a weekly basis. Any fall with any good sector or any fall with any good individual script, I think it can be buy on dip opportunity, which one should look at, and that's what we are also looking at in the portfolios. So many of the portfolios where clients are a little jittery about the return side, I think that's what we have decided that let's move some part to balance advantage fund where there's the automatic readjustment of equity debt allocation. And interestingly, Navneet mentioned it beautifully that it's retail participation, whether through your balance advantage fund, SIPs, EPFO, NPS, which has actually helped us to sail through in a way to sail through this obvious market fall because of FI heavy selling. So broadly on the wealth space, Gurmeet, as we discussed, I think that's the broader idea that sometimes doing nothing is the right thing. If people have certain fear about how markets will react, and for the future allocation should be either be staggered over a period of time, or then one should look at asset allocation right mix. If it's skewed more towards equity and he wanted to reduce, one can look at that. But long term looks like it's the same thing. Every past dip looks like a missed opportunity. Any present correction looks like a fair. Long term looks like that. Yeah, we are going to make it. And I just want to say that, boss, your number of units of mutual fund or your PMS holding or your number of stocks will remain the same. Price movement can be for X, Y, Z reason. And I saw you giving examples in 1998 what has happened in India. So your number of your holdings will not reduce. So don't look at the price movement. Just look at how you can grab a better pie of good business in your portfolio by keep allocating as and when you have some right price or maybe a price correction in the right businesses. So there was not business which is going on in 2020 first quarter because of the COVID shit happened. And we saw that once money started moving from FIs and markets started moving up. No earnings, but the P expansion was there. Right now, companies are doing well, fairly well. Your GST collection numbers look good. Overall, things look good. India per se, but yes, there is P contraction because there's money which is putting out by FIs because the obvious reason inflation is one. U.S. Treasury, rising. Maybe some margin money call at various places. So I think broadly, just keep calm, and if you can allocate, then there are very very good companies, businesses, sectors which are lucrative as on date. So we are focusing on that while talking to clients with me.
Sure, sure. Okay. I think beautifully. I think it's a. I think while you were giving a balance advantage, was quite a balanced view, must say. Uh, I think there is still some noise, Shitesh. If you could just address that, and we'll come back to you on that. So so I think what I just wanted to pitch in. I think I can see FI also now joined. I'll send him a request to speak also. Uh, so I think few things we are doing at Complete Circle is that as Shitish said, be very balanced. I have, in my 20 years, I was jokingly telling Shitish that I have seen a lot of these corrections. I started in 2002. That time there was a dot-com bubble. I was not able to get a good campus job. 2004, Vajpayee Saab lost election. There were three lower circuits. 2006 was Asian financial crisis. Markets tanked from 12,000 to 8,800. 2008 was Lehman Great Financial Crisis. 2011 was pigs economy, Portugal, Italy, Greece. 2013 was Fed taper. 2016 was demonetization. 2018 was Nirmala auntie doing long-term capital gain in equities, and then you had 2020 was COVID, and now there is Russia Ukraine. So something will obviously keep going wrong every 2 3 years, is what I've learned in markets in last 20 years. And what investors do when the going gets tough, determines, and including advisors and portfolio managers, they get differentiated during these times. So having a very balanced head on your shoulder is extremely important. What I've also seen is that good news and good prices don't come together. So it's very difficult to pinpoint कि Infosys का bottom 1,000 रुपए है कि 1,500 है कि 800 है. I think that's an impossible job to do. The possible job to do is that how it has done in last 15 18 years, whenever it has corrected 20 30%, considering that the guidance is good. So I think what we are trying to do at in terms of our newly launched PMS is that we are trying to figure out companies where we are getting some value on the table. We're trying to see what are the companies which are doing some innovation capex, and by innovation capex I just don't mean capacity expansion. I mean, so let's say a Divi's lab is likely to commercialize how many molecules in next 2 years. I'm tracking how much is PI Industries spending on R&D, how many molecules they will keep commercializing every quarter. I'm trying to figure out how many fintech innovations ICICI Bank will do more, how many what collaborations it will do. I'm trying to figure out how much would Tata Power spend on solar energy, on EV charging. I'm trying to figure out, what some of the, even traditional companies like Reliance are going to do with monetization on the energy portfolio. I'm trying to figure out what a Bharti will do tomorrow to its payment banks, to its 46 crore user base, including Africa, and the ARPU growth which can happen. So I think we should focus on more on strong players likely to do what over next 3 4 years. So output can be a bank, output can be a energy company, output can be a power company, output can be an ethanol company, biotechnology company. The input is innovation, input is expanding the pie, input is going full on the value chain. I think that's what we are trying to attempt here. We've been very lucky. We've been blessed with 55 new clients we onboarded in just the first 3 weeks of the launch of the portfolio management services. So it gives me a lot of pleasure. I wasn't really expecting this number, and considering how volatile the markets are, we were thinking we will do 100 clients in a year, and we are sitting at probably 55 16 first month. So God is kind. And I think it's a huge responsibility because to ensure that we navigate this well, we are being very selective. So we will take our own sweet time. It could be 2 to 3 months in deploying money across. This is what we would like to do, and that's why the name is Digital Compounders. We are looking at companies which where innovation is in the DNA, and we'll keep sharing monthly updates. We'll keep sharing. We'll be very transparent in what we do here. Unlike a lot of portfolio managers, we don't want to hide anything. If we own something, we'll be very vocal about it and very transparent about it. That's what we are going to attempt to do. And I'm personally very constructive on where things are, as far as I agree with Chitish there that we are in a sweet spot. And I think if how you behave in next probably 3 to 6 months, I think will determine your next 3 4 year return. So it's very important how we manage our nerves, both our nerves while deploying money and investor nerves while navigating. What I will do is I will now open the it's already been 40 minutes of
Gurmeet, am I audible? Yeah.
Yeah.
So Gurmeet, good that you mentioned about this digital compounder. Just for the benefit of everyone, the way we have constructed this entire concept, and I'm very happy to share. Normally, when you normally used to sign a PMS, you have to sign somewhere 28 30 signatures. So this digital compounder, and from the very first day, the concept was that we will onboard client also digitally. So we are onboarding all the PMS client digitally, except for the two signature, which as a regulatory requirement for POA you need to get signed, physical signatures. Otherwise, technology is actually coming fast, much faster than what we have expected, and that's what we can see from whatever initiative we are taking in our this company, whether generating leads, doing social marketing, or let's take for example onboarding clients, managing their portfolio digitally, and making them access to the portfolio live. So everything which we are doing, in this portfolio, or let's say, for that matter, anyone who's coming in new, will make things much easy. So we see one thing which Gurmeet said, one important part. Any business which is, one important point is that which is actually spending a lion's share of their spend of R&D on technology is something which we will consider as that. Yes, they want to integrate their back end and front end. They want to have a solution which is more technology oriented, and output, rightly said by you, Gurmeet, it can be any output. It can be fintech, edutech, food tech, or biotech, or insurtech, or any tech for that matter. But yes, just to make it clear, we are only 26% in our technology set of companies. Remaining all are companies which are imbibing technology as a catalyst.
Okay, thanks. I can see Nigel, FI, Mohit, everyone. I would ask Nigel. Nigel tracks commodities very closely, and if he can come, and I have sent him a request. Let's see if he's getting it or not. I mean, can give a since inflation has been a big worry. Uh, I don't know if I'm able to add him or not. Nigel, if you can also send me a speaker request, would nice to hear you. Yeah, I think he's there. Yeah, I know you're a little unwell, but thank you for being here. And if you could, give some sense on commodity and in general, what are you picking? It will help us add value, and then we'll open the floor. Nigel, you're there? Seems
Yeah,
some
yeah,
audio issues. Yeah, Nigel.
yeah.
Thanks.
Hi, good evening, everyone. Thanks, Gurmeet. Thanks, Sitej, for joining in. I'm feeling a lot better after listening to all you guys. Good to connect with Neeraj as well. It's been a long time. Neeraj, need to catch up for some gin, I think. It's been very, very long.
Very long indeed.
And Aditya, always admired your tweets. You made things so smooth for everyone. I mean, I enjoy the job that I do, but I enjoy following people like you as well. You know, the way you make it so easy to understand. It's like I'm talking to you. I've met you just once in my life, but fabulous. And obviously, my boss, who's in the house, Navneet, excellent points being made out there. For some reason, I don't know why she doesn't make these points to me. Maybe now we are actual competitors. Anyway, guys, so quick point in terms of commodities. Uh, today was uh, Today was actually a good day for steel in particular, right? And the few reasons I'll say that is, and the few monitorables that we should be looking at. One is on the input cost. Steel demand is going to be important, not only from an India perspective, but also in China. Because the thesis till now, till maybe a couple of months ago or so was China will produce less. If China produces less, then in fact, there'll be a bit of a shortage because obviously they will export less. Where the googly came was the Chinese consumption itself slowed down. So yes, they produce less. The problem is that they consumed far lower. Now that was a bit of an issue. So I'll tell you a few points that played out. Chinese prices, steel prices were $950 odd. That came down to around $700 per ton odd. Now in the last 1 week, Chinese have opened up. So the consumption has gone up yet again. So I've seen a good $30 jump in terms of Chinese steel prices. And that's what really drives the global steel prices because, just to give you a quick number, uh, China produces close to around 8 times of what India produces in terms of steel. All right, even after it's cut down. So China is the market maker on steel prices. Now, why did steel stocks rally today? One is Chinese steel prices bounce. Two is, in India, we have seen that steel prices have corrected by around 5,500 rupees per ton in the last 12 days. From the highs, they have corrected by close to around 10, 12,000 rupees odd. So we have already seen the part of the correction. Now global prices are picking up a little bit. And the last point I'll make is on input cost. That is both on iron ore. Everyone's talking NMDC ka bhao, it's down by close to around 25% or thereabouts. The beneficiaries will be the non-integrated names. Who's the non-integrated one? JSW Steel is one of the most non-integrated companies here in India. Non-integrated means they're not getting, their iron ore from their own backyard. So that was the one that, so JSW I think was up close to 3% odd because they buy iron ore from the open market. Iron ore costs are down and coking coal, which, just a year or so ago, it was hovering around what, $200 odd. Everyone was asking JSW Steel, etc. It went to $700. It's cooled down to around $412 per ton. So in the short term, if things remain stable, maybe we'll see a bit of a relief rally. Maybe. But you need to highlight all these monitorables: global steel prices, input cost, as well as Indian steel demand as well needs to needs to be monitored. And since you're all talking about inflation, that's going to be a very, very important factor, because if India's inflation cools down, then maybe that 15% export duty could be waived off. In 2008, I think it was done in a few months. If it comes off in the next few months, well, we'll see a rip-roaring rally here in terms of ferrous stocks. Just a small point I want to make, guys. I'll keep participating as and when you'll require me. Go ahead.
Thanks, Nigel. I think it was very insightful. Thank you for coming in, despite not being in the best of shape. So, guys, what I'll do is I have got a lot of queries, both on DMs and requests. I will start taking them one by one, and I will ask my fellow speakers also wherever need. So, the first query, since I've got this was the first DM I got. This is from Girish, and Girish wanted any recommendations from the EV sector. Okay, Girish. So what we are doing, Girish, in terms of what we track, and I'll ask also Neeraj and Kshitij to join us, that we, instead of looking as EV standalone, we are looking at the changing energy basket for India. And my personal view is, and I could be wrong, is that India will be a more hybrid model, with probably urban being more towards EV. We don't know what will it evolve into, because there is hydrogen, there is solar, there is this ethanol thing which is happening. Mind you, government earns 60-70 rupees a liter on petrol sales. So it won't be easy to completely let go of fuel, right? So since you spoke about EV, there is obviously we like Tata Power is one way of getting into the EV charging ecosystem, as well as they are now the largest in solar EPC panel. Uh, Minda Industries in auto ancillaries, which it's actually Kshitij's client. We've been tracking it for quite some time. If you see, despite auto going through a bad 3-4 year period, this company has started hitting 10,000 crore annual revenue run rate. Last quarter, they reported almost 2,500 crore kind of a revenue. They have now got into a lot of value added products, battery management solutions, electrical parts. And if you see today, in terms of segment, they are doing well across. They are almost the market leader in airbags. They're leaders in LED bulbs. They're getting into alloy wheels. So we call this as kit value. Kit value per car has gone up to almost 50,000 bucks. Used to be some 10-11,000 a few years back. Other way is to get into companies which are into the forefront of EV, whether it is Tata Motors, whether it is some of the two-wheeler names which are making progress. And as I said, play it through an energy mix. To me, Reliance is as much a clean energy play as anything else. I think what they did to a Geo, I think they're trying to replicate that in energy. So I think play it through a basket. Ethanol story can be played through probably Paraj or some of the sugar names. So play it through a basket. That will help diversification in markets like this. It's diversification has a lot of charm versus taking concentrated bets. Neeraj, anything on EV you think is interesting to track? And I'll ask Kshitij also.
No, Gurmeet, you summed it up well. I mean, we wouldn't be able to talk about stocks any which ways, but I think you summed it up really well. So nothing more on this one, at least.
Sure. Kshitij? I think Kshitij, you there?
Yeah. So, Gurmeet, I think the best way, as we have discussed internally also, is to have energy mix play. And then one can actually look at, so there is no stock recommendation we are talking about here, is one actually look at few names which are actually working like a partner rather than being a vendor. So there are a couple of good names around KPIT Technology, which is there, and we have seen how the company has done well. And couple of names on the EV charging station side, which is a very known name, Tata Power, which is there, which is working a lot on the EV panels, as well as raising up 25 gigawatt of your clean energy, hydrogen energy setup also. So I'm saying rather than just picking one company, keep looking at the basket side, because it's I will say it's all at a very nascent stage. So all this is going to coexist. Somebody was telling me what is going to happen with oil and petrol and diesel. So I think with the type of reach which you require on the EV side, and it's coming fast, and there is no second thought about it. But I'm saying it's too early to reach a conclusion about how things will shape up.
So I think the basket approach, which you also keep on mentioning in your interviews, is the right approach. One should look at that.
So thanks, Nitish. So I'll start taking now live Q&A. We already have 6-7 requests. I would just request anybody who's asking to keep it crisp. We would like to accommodate as many as we can. If you have a broader view, you can refrain. But if you have something to ask, something from the speakers, I would encourage you to do that. We have Virag first. Virag, can you go in, please? Thank you for joining. Virag?
Hello. Hi guys,
Yeah,
thank
Virag.
you for the opportunity. Can you hear me?
Yeah, I can hear you. Please go ahead.
Yeah, so my question is regarding the foreign institutional investors selling. From last 7-8 months, we are witnessing that foreign institutional investors are selling continuously on monthly basis. Even in March, we saw, even in the month of May, we saw that they sold equities worth of 50,000 crores closely. So, do you think foreign institutional investors are uh, they think something that we guys are missing out on? Thank you. That's my question.
Okay, so let me rephrase this. He's asking whether are we giving easy exit to FIs? Is that the question, Viraj?
Yeah, I mean, are they tracking something that we guys, that domestic guys are missing out on? I mean,
Interesting,
what are
interesting,
they?
interesting. Thanks, Viraj. Neeraj. Any view on this? I've heard people saying they will not sell as much had it not been for the the DI buying. Is there some merit to this?
I mean, you could argue, but I think, and I probably Navneet has some very interesting data. By the way, I must tell you, Gurmeet, just before I answer this question, the data presented by Navneet and Aditya on EV was quite fascinating to hear, really. So that is pretty cool. But I have to answer, I mean, I don't have a particular direct answer, maybe Navneet has, but just a quick thought here, Gurmeet. We all look at the monthly sale numbers and think that, oh my God, there's so much of selling happening as a percentage of the total quantum owned by FIIs. I mean, this is what probably एक katora out of the whole bucket, right? So there is no saying why. There's no reason why they should immediately stop just because they've sold an X billion quantum of dollars thus far, because the quantum of holding is just very very large compared to what has been sold thus far. It's just that limited point. But whether they are seeing something that we are not, I don't know. But compulsions from what most people say, there are compulsions for uh, area specific or those specific funds which have to sell out of particular geographies, and therefore that might happen.
Sure. Navneet, is it also due to large, because a lot of this is ETF money, and obviously sometimes you don't look at the price because passive money has its both merits and merit. When it goes out, it does go out in chunks as well.
Possible, Gurmeet. I think the prime reason here is when interest rates start going up in a developed economy, or when you expect that, which was happening in the start of this year, usually FIs tend to move out of emerging markets because they want to be with the safe haven dollar. That's the general notion which we also have, and it's worked in the past as well. And that's the investment philosophy, I think, why you are putting money into markets and why FIs or why sovereign wealth funds are putting, the intention is totally different. So their strategy changes when interest rate scenario changes. That's one. And whether it's peaked out or not, your guess is as good as mine, but I can just give you some history here. Of course, we've surpassed, this is the worst FI selling we've ever seen. We've surpassed 2008. But overseas selling generally, it eases when peak to trough outflows, they hit $8 to $10 billion. And I think we have reached there. We've seen $27 billion of outflows. So we are almost there as per the data. But again, whether there can be accelerated selling from here on, not too sure. But of course, with inflation, interest rates going up, FIs tend to divert towards the safer markets. That's the developed market in US. They're okay with the risk-free return which they get there.
I think that looks more logical. I think it's always about the yield gap model, the relative yields. So I think that's point well made. Thanks, Viraj. I hope you got some perspective, but frankly, we don't know. But if you ask my personal view, I think a lot of selling is behind us. Obviously, the last leg can be more painful, and typically the last leg of selling is more painful because that's when probably people tend to throw in the towel. But a lot of money is they've definitely lightened their position, and the damage is far deeper than what the index suggests. So if you go deeper, the damage is quite huge in a lot of spaces. Thanks.
Yeah, hopefully. Thank you for answering. Thank you.
Thanks. We have Vidya. Vidya, can you go in next, please?
Thank you so much, Gurmeet. Good evening to everyone. So, my question is related to the metal sector actually. So, I entered the metal space just before these export duties were introduced. So, I wouldn't take the name of the stock per se, but yeah. So, what would your advice be for someone who's just entered the metal space? The company which I have invested in is very, like it has a strong balance sheet. So, what would your advice be if someone has entered at a higher level and now, because of the export duties and the government policies, there has been a significant drop in the price? The company still is quite strong. So, like, I just wanted to get the opinions of everyone on the metal space, the ferrous metals especially. So, yeah.
Okay, so I'll give you my perspective, and then I'll ask the others also here. Is that, see, you got to have a very clear view. Metals cannot be a fundamental call. It always has to be a tactical call. I made this point earlier also. Tata Steel, for example, made 34,000 crores this year. It's actually equal to what they made in last 4 years. Right? They also deleveraged. They reduced the leverage quite a bit. So you have to get the cycle right. From 2009 to 19, the share price did not do anything. वो 250 था और 2019 में भी 250 था मोटा मोटा 4-5. I'm just taking an example. Tata Steel obviously not something which I'm trying to make a point on whether to buy or sell. And so and there were tweets on Tata Steel doing more than TCS. So typically, one formula may not work always. Is that when the P's are higher, the earnings are depressed. That's the time to take a call on commodities, and when the earnings peak and the PE falls, right? That's the time to be a little cautious. So my view is that since interest rates are being tightened, liquidity is being withdrawn. The first impact obviously comes on commodities because the growth tends to slow down. Monetary policy is a pretty blunt tool. It doesn't do surgical strike. It brings down demand. Sometimes triggers a recession, and vice versa also. When growth picks up, when you pump in money, when you do QEs, commodities tend to react the more. So they are big proxies or big mirrors of how the easy liquidity and easy interest rate environment is. Uh, the situation right now looks tough. There are so one end there is supply side disruption, and the prices don't seem to be coming down, and then obviously there is demand. But so my view is that be a little careful in terms of cycle. I probably think that the best time commodities is behind us. But if you get meaningful correction and growth can sustain, maybe you can be tactical. I'm not great at tactical. Anything you want to add, Navneet, Neeraj, on this?
Yeah, well, Gurmeet, I would just say that in Gujarati there is a saying that "Satta same shanpan nakamu," which effectively means don't try to battle the powers to be. And the simple point is, I think, as you enumerated, when inflation is a clear and present danger, anything that contributes to that inflationary pressure will be tackled with, even if that move might sound insensible at that particular point of time, because the target is not a particular sector. The target is the inflationary pressures. So, join the dots, and when is it a bad time to be in a particular space, and when is it not a bad time to be in that space.
Thanks. Vidya, can you be quick with the follow up?
Yeah, I'm so
We
sorry.
need to
Yeah,
take
I'll
more
just.
questions. So be very quick with the follow up, please. Yeah, thanks.
Yeah. So, do you think there is a possibility that the policies that have been introduced, like the export duties, those could be rolled back within the next 3-4 quarters? Uh, because it was done in 2008 as well. So once the global conditions are under control and some of the things are in control, so could that happen? Like just as a view of everyone, I just wanted to gauge the view. What's the view on that? Yeah.
Honest answer, don't know. Clearly don't know. And I'm saying, in these environment, you should focus on what you can, research. And I think some more structural plays are there rather than commenting on what government will do, what it will not do. Too fluid a situation, my friend, to to take a call on this. We'll take the other one now.
Thank you.
Thanks.
Thank you.
Uh, We have Mr. Sanjeev Agarwal. He's a chartered accountant. He's in next. Can you please go ahead, sir? Sanjeev ji, can you hear us? I think there is a problem. Okay, we have Mr. Sammed
हेलो
Vardhan.
मेरी सर आवाज आ रही है क्या मेरी?
हाँ जी आ रही है. प्लीज बताइए संजीव जी.
सर मेरा क्वेश्चन सीमेंट सेक्टर के बारे में है. जब भारत एक रोबस्ट इंफ्रा ग्रोथ की ओर जा रहा है और अल्ट्राटेक सीमेंट ने अपना एक्सपेंशन प्लान भी बनाया हुआ है, उधर अदानी जैसा जायंट भी एसीसी अंबुजा को टेक ओवर करने की कोशिश में है, तो सीमेंट प्राइसेस जो सीमेंट के शेयर्स गिरे हैं, क्या इनमें इनपुट कॉस्ट की वजह से गिरे हैं और भविष्य में रिकवर होने के इनके कितने परसेंट चांस है? और एक क्वेश्चन ये भी था कि अल्ट्राटेक के एक्सपेंशन प्लान जितनी बढ़िया बात का मतलब है कि फ्यूचर में ग्रोथ बहुत अच्छी है, और उसको नेगेटिव न्यूज बनाकर उस दिन सारे सीमेंट के शेयर लगभग 8-10% गिर गए थे सर.
Yeah, Navneet, Aditya, anyone wants to take this? Okay. See, sir, I tell you why stock price is reacting negatively, and then I'll ask others to pitch in. Is that whenever anybody announces huge capex, the while it's a long-term positive move with people spending on capex, it's sometimes the market probably feels that there could be a pricing war because Adani, the industry is consolidating. You have somebody who's adding capacity. So initial negative reaction हमने देखा था जब JSPL Paints और जिंदल पेंट्स और बिरला ने पेंट्स में भी ग्रासिम ने अनाउंस किया था. इट हैड अ सिमिलरली नेगेटिव रिएक्शन ऑन द पेंट कंपनीज आल्सो. द फर्स्ट रिएक्शन ऑफ एग्रेसिव कैपेक्स is the fact that company might have to take more leverage. There could be pricing war, so there could be a negative reaction. Also, sentiment की भी बात है, right? On cement long-term prospect, I think I'm a believer that in India this cycle is mirroring 2003 to 9, where it was a housing revival-led private capex. I think the revival in housing is real. 10 साल बाद 11 साल बाद real estate numbers अच्छे लग रहे हैं. And I think we are in general constructive on the overall home improvement theme. All we got to be a little careful is the price. Sir, काफी noise है.
नहीं जी.
So all we got to be very careful is the price we pay. अगर आप 15 EV by EBITDA दोगे और 40-50 का P multiple दोगे सीमेंट कंपनी को, तो obviously disappointed होगे. So if you pay the right price and you're in for the long haul, I think housing as a theme, I can't really comment on. I mean, cement should obviously also is figures in that. But housing has various sectors with its cables and wires. You have pipes, you have sanitary wares, you have tile makers. I also think that despite interest rate going up, home loan is 6.9. Government of India borrowing rate is 7.4. Something is not right here. So my view is that this will be a housing-led private capex cycle. What it looks like, unless the interest rates go up too sharply to dent demand. So overall housing theme we are constructive, but don't overpay. That's the limited point I wanted to make.
Okay, sir. Okay. Thank you, sir.
Thank you. We have Sammed. I think Meet Bhai is there. I will add Meet also, and I have FI also. FI, Meet Bhai, anything you want to add on this housing and cement?
Yeah, actually, see, looking at the first of all, good evening to everybody. Okay, so Gurmeet, Kshitish, thanks for having me. I'm just traveling. See, the thing is, right, when I was looking at the questions like metals, oil, or even the recent question about cement, right? So Gurmeet, as you rightly mentioned, 100% there is enormous potential in all these, right? But one thing I have noticed is that we need to figure out whether we are taking a trading view or an investment view, because end of day, right, when we are taking a long term view, 100% the stocks are going to keep moving up and down, right? But if the earnings keep going up, then we are going to probably create some wealth, right? So that is one thing I wanted to add, especially because most of us enter sectors which are running up, and once we enter into it, later on when the correction comes, then we start doubting our initial thesis whether the sector actually makes sense. But longer the horizon, right, most of the sectors will start making sense, because whether it's cement or whether it's pipes or whether it's sanitary wares or whether it's paints, right, even if you look in Asian Paints, it gets written off whenever there's a correction, and whenever it starts moving up, immediately we all feel that wow, that is the best sector to be, and this is one reason why we end up overpaying. So I think that's a very generic point I want to make for all the listeners here, that if you believe in a particular company, if you believe in a particular basket, in a particular business, whether it's EV or cement or technology, whatever, right, take a long term view. See whether the business is actually performing as per your thesis, right, as per your growth over a long term, because the corrections will keep going up and on, right. One more point I wanted to make, Gurmeet, is on the FII front, right. Gurmeet, I have a question for you, right. See, 2008, the total market Nifty itself was smaller. The total market size itself was smaller than today, right? Isn't it?
Yeah.
So when FIIs sell, obviously it will look like I'm just giving another perspective, right? The bigger the base, the more billion, the more million, like you start seeing a bigger figure. It's like Nifty tanking, let's say X amount, right? So people say 4 lakh crore is gone, 5 lakh crore is gone. Maybe 20 years back, it would have been probably a smaller number. So what I would like to say to all the participants is that as the market, as India is growing, right, every 10% fall will look like, whoa, that's huge. But actually, in percentage terms, sometimes you'll feel that, okay, that is a part and parcel of this particular growth story. Okay, so just wanted to add these couple of points. Yeah, Gurmeet.
Super. I think very well made. I think the base must not be forgotten. I made a tweet also today that 300 point गिरता है blood bath, 200 point ऊपर जाता है rockets के emojis आ जाते हैं. I think it's becoming like the daily soaps, right? So it's important to, yeah, unless you are an intraday trader, obviously it makes sense. Thank you. We have Meet also there. Meet, you wanted to add something? Please go ahead, buddy.
Hello, Gurmeet bhai. Guru bhai, my question, I have a very simple question for you guys. Since I am PMS investors in with many fund managers, so I always ask one simple question to any fund manager, that how do you avoid traps? For example, if a company is growing at 20% CAGR, we would call it a good growth company. But what if the industry is growing at 25% CAGR? So we have a high chance of getting caught in the growth trap. And another example, if the company is growing at 10%, but the sector is growing at 2%, so this is a classic case of getting value trap, like crocodile in the pond, right? Because many times, what happens, Gurmita, is we are always presented with the demand-driven data. The demand is growing at 15% or 20%. But what happens when the supply is growing at more than the demand? Like supply is growing at 25% or 30%, but the demand is growing at 15% or 20%. Okay, so my question is, how do you avoid this trap? I'm only asking from a perspective of an retail investor.
Sure.
So
No, I think
can you
that's
throw some light on it?
excellent question. I think it's a very very good question. Kshitij, you want to take that? What we do in terms of our filters, the CAPM model, or you there?
Yeah, Gurmeet.
Yeah.
Hi.
Yeah.
Sorry, I was out and was not able to contribute much. So, Meet bhai, good evening. And I think one of the best thing which I keep on sharing with Gurmeet is that accident तो होंगे पर कोशिश ये करने की कम से कम हो. That's what we look at. So everybody knows what to buy, and we have a lot of good people on Twitter Spaces and everywhere where they keep on talking about what to buy, and they have recommended this, and this has gone so up. But what we keep on doing at our end, what not to buy, and how much, and if let's say, so how it works is like when you filter on all those 6,000 companies over various parameters, which anybody have their own. So we look at one parameter, which is the compliance and integrity parameter, which is the paramount. And I'm not saying filtering it through will ensure that we will not go wrong, but I'm saying we will try to go level 2, wherein not only the company balance sheet or earning calls or meeting most of the promoters, or let's say taking a feedback from the market, from the vendors or suppliers, but at the same time doing our second thing, irrespective of businesses how good it is, but there is a CAPM model, there is a WAC model, a weighted average cost of capital model, which we follow to the core while filtering it out whether I'm buying this stock or this business little costly or not. So maybe I like a company So maybe I'll miss on it. Maybe I feel that that this is not the right price, and still it moved much ahead of that. But I will follow that model, and I will ensure that I will not buy any business which is way ahead of its intrinsic value. It can be around that, but I'm not going to do that. Third important point, and this is very important, is that irrespective of that, whatever parameters we have filtered down, we will keep on going back to our evaluation board, to our investment committee, which is there, and keep on talking about that, where how we can go wrong with this business. So one business, let's take example of auto sector, which was going through a turmoil, or I must say that struggling last 3 4 5 years. But there were few companies on the OEM side which has done well. Gurmeet just discussed one of them almost 15 minutes back. So you have to pick and choose those type of ideas when you are looking at it. At the same time, there is a allocation matrix which one should follow, irrespective of how much in love with you are with XYZ company. You have to ensure that in your portfolio it should be a part of it, not the entire pie, or let's say one of the major pie in the portfolio. That helps in reducing that volatility as well as the risk part when you go ahead with some of the businesses which you buy, which are not those blue chips of the company. uh, Another important point, we what we have seen over a period of time in our 20 years of a career, and me and Gurmeet have spent most of it together, that return wise, clients, so एक अच्छी बात ये है कि that any wealth, any wealthy client, or let's say client who's already managing or have a lot of wealth which he want to grow further, he's already rich. You can't make him richer. One principle which you have to follow is to preserve the wealth, and second is just give that additional delta. So the product mix which you offer to a client is very important, that you should take the risk which is very much at the portfolio level as well as the client level is important. So just don't chase uh, uh, those companies which are looking at 18-20% of their price growth, but look at businesses which are looking at 20% plus of their earning growth, and as well as ROE growth. That's what one should look at. So that help us in zeroing on businesses which we keep on evaluating at our end. I have my colleagues, Navneet, Pragya, Gurmeet, now Adi is there, which who helps me on many of the international arena. We have Puneet, who keeps on guiding us how to go about it. So that's how we work on. And at the same time, Meet bhai, try यही करेंगे कम से कम गलती हो, but yes, there are checks and balances which we look at.
I think brilliantly, mate. I just wanted to add one point, Meet Bhai, on this, that Kshitij was instrumental in getting some data on capital asset pricing model. See, we are, I've made this point. I'm a very textbook old school investors. I used to say this when there were a lot of questions on startups getting listed. So I know capital asset pricing model CAPM is not the perfect model, क्योंकि उसमें unsystematic risk नहीं लेता है. वो खाली systematic risk लेके it measures the risk return trade off, and it assumes an efficient market. But so when we did that, we got some weird prices initially, but we were able to calculate some intrinsic value for few companies. I'll give you an example. We were very we wanted to had Bajaj Finance in the portfolio. 3 months back, before this was before we were making a model portfolio, and our license had just come, and the price was a little high. The CAPM model actually said that it's showing 40-50% premium, right? So sometimes if you go by the textbook, use some old relevant tools, you avoid mistakes. Second, Kshitij said that galti manna bhi bahut important. Mistakes happen. Best of the investors make mistakes. We make mistakes. I personally made so many mistakes. So best thing is acknowledge it and move on. हम वो जो emotional हो जाते हैं कि ये मेरा stock है, मैंने public forum पे बोला है, ये मेरे portfolio में, how can I go wrong with it? You can go wrong. I mean, the RJ went wrong with DHFL and Yes Bank. Warren Buffett went wrong with aviation, IBM, and so many stocks. Everybody goes wrong. They are good to correct and move on. And I think that's is something we would try to do, and we create lot of discussion. I mean, एक आदमी कॉल लेता है ना, तो मिस्टेक के चांसेस ज्यादा होते हैं, कई बार सक्सेस दिमाग पे चढ़ जाता है. So we have a 5-member team now where we discuss ideas, and there are a lot of things we don't agree upon. तो थोड़ा अगर टीम अप्रोच होता है ना, तो things do come out. And third is too good to be true. जो भी too good to be true लग रहा है, उसको एक बार और अच्छे से देख लो, right? The way we extrapolate sometimes, I think, is where lies the problem. अभी जैसे ऑयल को सब extrapolate कर रहे हैं कि 120 रहने वाला है, right? इन्फ्लेशन 7-8% ही रहने वाला है. right? So वो zero भी नहीं, unfair था. I think 120, 130 is also on the higher side. So I think this extrapolation has to be avoided. Assuming things that this will continue like this. We are in a disruptive world. Thanks.
Thank you, Gurmeet bhai. Perfectly said. Gurmeet, I just want to add one thing. Since we are discussing about normal general market perspective, that if we look at the data, when in March 2020 market crashed by almost 30%. Okay, so if we look at the data, who were the buyers? FII sold, DIIs already loaded. The retailers panicked, but it's the promoter who bought heavily in the market. I think that is called real long-term thinking. That is called skin in the game, or it's like heads I win and tail also I win. Okay, so I think हमने जो पहले आपने जो कमेंट्स की रिगार्डिंग द मार्केट पर्सपेक्टिव के ऊपर जाए 300 पॉइंट नीचे आए, it doesn't matter if a good company is coming at a good price. It rarely happens, but if it comes, then it's a good time to load them and back the truck. Thank you very much.
No, I think that's a great filter. Yeah. Sorry.
Gurmeet.
Yeah.
Hey, it's fine. No problem. Meet a beautiful question. Okay, I want to add one more value trap because I have also made a lot of mistakes in my journey. Right. See, one value trap which I've seen is, let's say a company grows at 200% or 300% suddenly in a particular year. This I'm sure many of you will be able to relate. Okay, so those kind of companies will keep coming on the news and everywhere else, right? And next year, let's say it grows at 15%. So what happens, right? From the previous growth, this looks really, really minuscule. So sometimes these kind of traps are very much prevalent in today because so many things, suddenly the base is very small and we see enormous growth in something, whether it could be commodities, it could be cyclicals, it could be any kind of consumption materials also, right? So that is something which I think we should have a very rational view when we get into such because once we get in, then we start building stories around it that it becomes a bias and we are never able to exit out of it because we got in when the company grew enormously and the company never ever grows like that until again the base goes down, right? So this is something which I thought could be one more value trap which could be there in the market.
It's like how I can go wrong. So when you see little movement, then you realize no, it can still go up, but it's a negative spiral downward only, which you end up making losses. I think our learning over a period of time is FI that cut losses, and that is something. If you're ruthless about it, that's the best thing one can do. If you can cut your losses, nothing like it, except rightly said by Gurmeet that you have gone wrong, and cut it there only. And then in your next IC meet or with your colleagues when you're discussing, ensure to reduce further your mistakes because that's how you can evolve. Mistakes will be a part of us, but yes, you have to keep on reducing them. We have Pragya, Gurmeet.
Yeah, I'll ask her to add once we take the next question. Hi, Pragya. Good to see you.
Hi, Gurmeet. Hi, Kshitij. Hi, everybody. It's been a pleasure listening in all this time.
Okay, Adarsh, we have Adarsh and then...
So can I ask a question?
Yeah, please, Samit, please go ahead. Yeah.
First of all, thank you for giving me opportunity to ask a question to wise people around here. So basically, I have three questions. Equity means owning a piece of a business. So should we really care about FIIs going out, DIIs coming in, inflation rising? All those things matter over the period of 10 to 15 years. And second question is about why prices changes the perception of a people. And third question is, if you are investing with the margin of safety, should we really care about micro and macro level economics? Thank you.
Aditya, you want to take it, please? I think he's answered also along with the question. Aditya?
Yeah. So just 1 minute.
So Samit, I think I agree with you. In fact, I keep telling investors sometimes very bluntly कि Nifty 5-6 साल में double हो जाता है. right? Since historically, to make 11-12% आप index ले लो, you really don't need to do anything. Just sit tight, and if you are getting confused with all the analysis, news, views, etc. आप इंडेक्स ले लो और बैठे रहो आराम से 15 साल प्लस. तो आई थिंक लॉट ऑफ इट वाज टेकन केयर ऑफ. ऑल ऑफ दिस सेलिंग, realignment of indices, inclusion of Nifty, exclusion in MSCI, all will be taken care of. So passive will help, and these the indexes have become so active that it's technically not passive. So you can do that, and with probably, if you can, as you grow in the market, you learn, you tend to identify good businesses, and that's when probably some delta comes in. Anyone
Also,
else?
just wanted to add a point to that, Gurmeet. If you all have been following Gurmeet, he's been mentioning about quantity goals. So if you believe in a business which is fundamentally sound, and you think these near-term or temporary hurdles, be it micro or macro, you can ignore them and just do SIP. So we at Complete Circle, we've tried doing some exercise, and we figured out if somebody started a SIP of just about 10 shares of HDFC Bank or Infi back in Jan 2005, accounting for corporate actions, be it bonuses or split, you'd be sitting on good chunk of a number of shares, which would also give you passive income in the form of dividend and appreciation in terms of share price.
That's
I think Gurmeet sir, yeah.
I think so. Aditya, okay, Sameer. One thing which I like to add to what Navneet is saying, when you buy any business after zeroing down on, let's say, XYZ company, any business you can pick, then just try and understand that business is not here for 5 or 6 years. The businessman who's running the business, or let's say any institution which is running a business, they are not bothered about how the market share price is moving. They are here to generate maybe a service or some product, and on which market prices dependent on a lot of other things: macros, micros, global, oil, inflation, blah blah. So I'm saying, idea is to understand that business is here to stay.
But eventually, we are also owner in the business.
Yes, you are. That's what I'm saying. That when you have ownership in a business, then you should look at holding the business for long. And when you have 10, 15 years on your side, I'm not saying just sleep over it, but yes, keep reviewing how the companies are doing. But at the same time, just have that patience on your side, and you will get rewarded. I think that slide. Okay, this is not a Zoom call. Otherwise, I would have requested Navneet to show that slide. It's an amazing slide. I will put that slide after this on the wall. It's a very interesting slide. How businesses over a period of time. And if you ask me, that quantum of SIP required to achieve the type of wealth which one has created in 2005 was 3,000 rupees only, with 4 shares which you are doing 10 shares each on a monthly basis. So I'm saying past examples which we are taking, and everybody say that's in past. But you look at, if you start something now, 10 years later, we will look at that it was in past. So I'm saying, just hold on, and you are already there. You already answered in your third question that when you have a long-term view, then there is no need to rush to it. Adi, all to you.
Yeah, so I was just about to say the same thing कि आप तीनों ने मिलके तीनों question answer कर दिए. So I agree with all of you. If you have a long-term view, then like Gurmeet sir was just saying that every 3, 4, 5 years a major event comes in, but still businesses keep growing. Short-term implications, short-term impacts will be there, but in the long term they do create value. So yeah, I mean micro, macro, business, geopolitics is a part and parcel of the game. So yeah, these are like speed breakers. Right, when you travel on a road, there are speed breakers जहाँ पे speed कम होता है आपके गाड़ी का. So it's like that. The portfolio will slow down, but eventually in the long run, that portfolio will help you reach your destination. So yeah.
So okay, guys, I think we are already 1 hour 20 minutes into this. I think we'll have few speakers also who've been waiting. Last के 2-3 और लेते हैं, and let's So we have, I think, Akhil and Adarsh.
Yeah, Adarsh. Yes, sir. Hello. Yeah, I'm audible too.
Yes, you are.
Yes. Yeah. So my question is regarding logistics sector. So if you are heading towards Make in India and 5 trillion economy, so if we could analyze the current infrastructure of logistic industry of India, so we are lacking behind the world. So the current expenses around 13% of our GDP in logistics, compared to other countries, developed countries, is 7 to 8%. So my question is, what the dire need of industry is the automation in logistics sector, which we are lacking from currently we are lacking. So exactly, you are tracking technology sectors. You guys are done so well study about the technology. So what you are putting some points or some viewpoints on logistics sector through the using of uses of technology.
Gurmeet sir, should I take it?
Yeah,
Delivery
please,
pada tha
please go ahead.
recently.
Go ahead.
So Adarsh, you're absolutely right. India does spend a lot of, a percentage as a percentage of GDP. The spend on logistics is high, and it is coming down. I would not say
Coming down, yeah.
yeah, I would not say it is in a dire situation because if you look at the capex that has come in the logistics sector, just take a city like Nagpur. All of the major e-commerce players or major logistics players have their warehouses already there, or are in the process of setting up one over there. I was doing my masters in 2017. I remember I used to order from Amazon, and I used to get it on the same day. So there was a warehouse nearby. It was a very discreet area outside of Bombay. So third-party logistics, warehousing, hub and spokes are being built at a very rapid pace. You look how technology is used by every order that they fulfill. Of course, India has been taking steps in the right direction. If you know, there was Octroi before. There used to be check post at every border. There used to be a lot of paperwork. But you just look at the number of e-way bills that are being generated today, and that itself will tell you that it has been beneficial. It has been a step in the right direction, and I would suggest and I would recommend that we have to give this sector some more time. Of course, there are a few good companies that are already listed here. Companies like, say, maybe TCI Express. Mr. Chandra Bhatia speaks a lot of great things about the sector. They're into e-commerce logistics. So the 5 to 25 kg. Which we call as express logistics, right? So India is one of the pioneers in that. Third-party logistics, last mile delivery. Again, not a recommendation, but what I just wanted to say that India is moving in the right direction. The percentage spend as a percent of GDP is coming down, and definitely we may look at some of these companies going forward. Yeah.
Thanks. Okay, Akhil.
Yeah, hi. The thing is, this is actually on a risk of being repetitive again. We were talking a lot about FPI outflows in the last couple of months. I wanted to know that we've also seen a very high surge on FDI inflow over the last few years. There's obviously been a very big infra push by the government itself. My question is that the corporate sector is obviously betting big with a lot of capex projects that we're seeing through big large companies. I want to know that is there any data which shows that there has been a considerable amount of promoter buying into companies in the last few quarters or so? And one more question I had, which is a little offhand, is that is there any key matrix which you see in identifying pharma companies? Thank you.
Okay, I'll ask Neeraj to take the second one. FI, we have discussed. I think promoter holding data we should share. You should follow our company handle. We will share increase in promoter holding data, but can be tricky. Don't take it on face value. But yeah, so we'll share that data. I think FI data is in public domain already. Neeraj, anything on? I mean, how do you, since you interview a lot of people on pharma and some of the sessions I've seen anything any outlook on pharma, especially considering that the healthcare sector, which was a darling during COVID period, has taken quite a knock, including the marquee ones like Divi's.
Gurmeet, can you hear me? Yeah, guys.
Yes, Neeraj, please.
Yeah. No, so I'll just here I'll stand on people's shoulders. I mean, the few people who track pharma very, very closely, who we've spoken with the recent past, and Gurmeet, our conversations as well, both offline and online, right? I think everybody seems to be suggesting that for the generic companies which are also having a US business, it's become a bit of timing the space well, or trying to time the space well in order to understand when the uptick would come in. And quite frankly, some very good names have gotten it wrong, right? In the last 24 months, you can't blame, because There were
Absolutely.
a lot of COVID restrictions and all of that, but that hasn't played out. Most people are selectively fairly gung ho on API companies which are moving on up the value chain and trying to do more than just the API business, and where capacities are on stream and earnings growth looks okay. I think that's where most fund managers, when they talk about it in private conversations, or sell side guys when they talk about it in public forum, tend to be betting on, or at least in the recent 6 or 9.
Sure. Sure. So, so other thing I think which in our conversations with, as Neeraj rightly said, we track this API cramp space very, very closely. This is a lumpy business. So all the companies who are into custom synthesis, so basically four categories hai. Generic hai, which Neeraj pointed out in terms of exporting to US. Then you have branded generics, where you have a lot of these multinational pharmas like Abbott, Sanofi. Third is your API and cramps, custom synthesis, and fourth is your diagnostic hospitals. These are four broad categories. Since I'll take an example again. Divi's is not a recommendation, but since we are on that topic, so Divi's basically makes your generic APIs, and it also does custom synthesis of these active ingredients and advanced intermediates for pharma MNCs. So basically, pharma MNCs are its client. Mix is 40/60. And in custom synthesis, Divi's is a clear leader. Great relationship with all global pharma companies. Significant market share in products like naproxen, gabapentin, and now this they are also making tolnupavir which is the COVID API. And the company actually reported best ever sale, but the guidance was what it is. So they are developing. There are a lot of products which are under various development stages. They are working on expanding their overall API portfolio. They had a very high concentrated portfolio, and they're working on their Kakinada facility debottleneck. So is business में क्या होता है कि you get one approval and suddenly the top line gets added, or few order gets added. But a lumpy business hai, and the validations etc also take a lot of time. So unless you are very clear, right, that that these are some of it is leap of faith also. So I personally think pharma outsourcing is a huge opportunity. इसमें वो China plus one वाली भी है, और इसका size बहुत बड़ा है. This is like $20-30 billion. कम से कम $20 billion के जो molecules हैं, they are going off patent in next 2-3 years. And China is no longer a 80% market share है उसका. So pharma outsourcing to me is a huge opportunity. But ये ना lumpy होगा. Suddenly you will see, we've seen DVs go up from 2000 levels to 5500. You've seen it fall. Happened with a lot of these companies. So थोड़ा सा you have to have good understanding of this. You need to understand what it is getting into. बड़े उसमें established generics हैं, complex है, certain APIs है, contrast media है. थोड़ा सा पढ़ लो. Just because the price has fallen, and invariably take help of experts. There are few Twitter handles you should follow. Aditya Khemka, Unseen Value. These are some Twitter handles who, Puneet Bansal, they give some great insights on pharma, APIs, custom synthesis. Do that, learn this. Unless you learn this, don't bet. Otherwise, go through a fund route or give it to an expert. Okay, we will get maybe last one, and then I have got a lot of DMs. I think this has gone on for almost 1.5 hours now, and almost. So one last one, we have Karthik. Karthik, can you go ahead? And others, if you can DM, we will try and drop your email. We will try and respond to as many.
Hello, sir.
हाँ कार्तिक, बताइए please.
Sir, my question is, since there is not so much of movement in Sensex and Nifty, I want to particularly say about LIC share, which below market cap is fall below 5 lakh crore, and share price also dips below 3%. So what's your point, sir? What will be the future of LIC share? Whether it can able to recovery, or it just starts to dip day by day?
So Pragya, you want to take that? Maybe we can cover insurance sector. We will not be able to comment on one particular share in terms of recovery due to compliance reasons. Pragya, you want to take insurance sector and give a bit of perspective?
Sure, Gurmeet. This insurance story has been repeated, repackaged, rebottled, and sold many times. Now we have a giant amongst us, like LIC. Unfortunately, some bit of wealth destruction has happened, and because a lot of investors have burnt their fingers, at least in the last like 6 odd months, people are a little bit iffy about it. On the insurance sector, we have two like polar opposite valuations. If you look at HDFC Life, it's trading at say about 3 times embedded value, whereas you have an LIC which is trading at the other end of the range, almost now 1 time sort of book. So a long-term view on this is definitely structural, but we have to start seeing, more to sort of, I'm giving a shorter answer. We can go into numbers, but size and legacy will be sort of key hurdles as far as LIC is concerned, and they'll have to do a little bit of more digitization. They'll have to ramp up their business model, try and compete better with some of these guys like HDFC Life to show the numbers to the investors, because if you want to keep it as a long-term story, it is the largest player. It's about 65% of market share. So it's one of those stocks which you keep in your portfolio, and when its time comes, maybe it'll probably do better. But we are positive on the sector per se. Say an ICICI Lombard or one of these guys in the general insurance space, now that there's going to be an increase in the third-party insurance premiums, we should start seeing some normalization, because COVID is now out of the way. So their books should now normalize. Some of these ratios should start looking well. So I think the time of the sector is here. Only that the numbers for these sectors, some of these nicer marquee names, which have a good book, a diversified book, their business has been lumpy. They haven't done well in the last 2 years. But I think, after a lag of about 6 odd months, their financials should start looking better. They haven't done much as far as stock prices are concerned. So I understand that, that's a concern. But on the overall macro, like fundamentals of under penetration, and now that COVID is out of the way, there is a sort of a demand that's picking up from a younger bracket. It's also one of the spends that people are now going to focus on. So if there is an auto demand which is coming back in the May numbers, you may see a lot of life insurance also being bought. So the demand will come, but I think there's going to be some time that we see that fillip and that bump in the numbers, whether you take up the general insurance space or, say an ICICI Pru or HDFC Life. Some of them are expensive, but yeah, they'll have to justify it with a little bit of numbers. So we're tracking this space closely. We're quite bullish on the fundamentals of the sector per se, but they'll have to justify it with the numbers. Say in about 6 months' time, we should see some positive traction here.
Super. Okay, thank you, Pragya. That was quite comprehensive. So, guys, we'll just
Gurmeet bhai,
please.
Gurmeet bhai, since we are talking about different style of investing in sectors, we have Arvind sir. I think he's one of the best guys for Scuttlebutt in India, because whenever I meet him, वो कभी ऑफिस पे होते नहीं है, कभी ना कभी कहीं ना कहीं कोई ना कोई plant visit पे होता है. So I think it will be very helpful if we can add some value regarding Scuttlebutt investing.
Who this is?
Arvind sir.
Arvind Kothari.
Yes, Arvind Kothari.
I'm not able to see him. If he can send me a request, maybe I can add him. Okay, since before so आती है तो मैं view लेता हूँ उम्मीद भाई उनका. So I'll just take one closing comment. You kept Neeraj waiting for too long. One closing comment from all our speakers, and then we'll take Arvind and we'll wind up. Neeraj, over to you, and then we'll take just few lines, please. Yeah.
No, Gurmeet, I think the simple point is, I would just say that if people can really spend some time trying to study and trying to time sectors, etc., great. Otherwise, entrust money with mutual funds or PMSs like yours, I would suspect that is probably one very decent way to create wealth in times of uncertainty.
Thank you, Neeraj. Really means a lot. Thank you.
No, but I mean it, not just because I'm on this platform.
Thank you. FI? The closing comments.
Yeah, sure. I would just like to end by saying that, shorter the time frame, more will be the questions. Longer the time frame, lesser will be the questions, because it's a long journey. Okay, so study well, research well, and then take a call.
All right. Thank you for. I think Neeraj bhai is there. Neeraj bhai, thank you for joining. I know you had an Awaaz Adda show. Thank you for tuning in late. We are almost done. आपका एक सलाह अगर आप दें retail investors को considering market volatility?
देखिए, रिटेल इन्वेस्टर के लिए मेरी सलाह ये है कि जो लोग भी इस प्लेटफॉर्म पे जुड़े या जो लोग और भी सुन रहे होंगे, उनको इस मार्केट में मुझे लगता है कि बहुत अच्छी अपॉर्चुनिटीज मिल रही हैं। स्पेशली कुछ एक सेक्टर्स हैं जो बहुत मुझे लगता है कि प्रॉमिसिंग है और इस मौके पे बहुत अच्छी अपॉर्चुनिटी दे रहे हैं। रीजन इसलिए मैं कह रहा हूँ क्योंकि पिछले कुछ समय से अगर आप देखें तो उन सेक्टर्स में कंसोलिडेशन दिख रहा है, बहुत ज्यादा फॉल अब नहीं आ रही वहां पे, और जब भी मौके आते हैं तो हम बाउंस बैक देखने को मिलता है। उसको समझने की जरूरत है। तो दो फैक्टर हमको प्रॉब्लम कर रहे हैं, एक इन्फ्लेशन बहुत दिक्कत कर रहा है, दूसरा क्रूड ऑयल। इन दोनों का कनेक्शन उस सेक्टर से है, मैं आईटी सेक्टर की बात कर रहा हूँ, उस पर लोगों को गौर करना चाहिए, क्योंकि मेरा मानना है कि क्रूड ऑयल और आईटी का डायरेक्ट कनेक्शन है। कुछ लोगों को लगता है कि क्रूड ऑयल बहुत ऊपर जाएगा तो उससे दिक्कत आएगी। मुझे लगता है क्रूड ऑयल जितना ऊपर जाएगा आईटी के लिए उतनी ही ज्यादा फायदे की बात है, क्योंकि उससे बहुत सारी कंट्रीज का पैसा उसमें आता है और विंडफॉल गेन हो रहे हैं। तो अल्टीमेटली जो कैपेक्स होगा उसमें आईटी का एक रोल प्ले होता है। तो बहुत लंबी स्टोरी है, कभी हम लोग फिर अगले प्लेटफॉर्म पे मैं आपको समझाऊंगा कि इसको मैं क्यों कह रहा हूँ। मैं एक छोटा सा एग्जांपल क्रूड के संदर्भ में देना चाहता हूँ, जो कि बहुत इंपॉर्टेंट सभी के लिए समझना। क्रूड एक ऐसी कमोडिटी है जिसका डिमांड सप्लाई से कोई लेना देना नहीं है। एकदम भूल जाइए कि डिमांड और सप्लाई में उसका कोई मतलब है। ये प्योरली इस बात पर डिसाइड होती है कि प्रोड्यूसर जो है उसके वो कितनी सप्लाई रखना चाहते हैं, कितना प्राइस वो रखना चाहते हैं। तो डिमांड अगर बहुत बढ़ रही तो सप्लाई घटा देते हैं, और डिमांड घट रही तो सप्लाई बढ़ा देते हैं। इसमें पूरा उल्टा फॉर्मूला चलता है। तो इसमें हो क्या रहा है इस वक्त की तमाम जो ऑयल प्रोड्यूसिंग कंट्रीज हैं उसमें बहुत ही कंस्ट्रेंट आ रहा है प्रोडक्शन को लेकर के। कैपेसिटी नहीं है, केवल 2 कंट्रीज को छोड़ दें अगर सऊदी अरेबिया और यूएई को, तो कैपेसिटी है नहीं। इसका खामियाजा क्या हो रहा है कि बहुत सारा इन्वेस्टमेंट आ रहा है। मैं आप लोगों के सामने एक फिगर रख रहा हूँ। यूएस में इस बार $12 बिलियन का इन्वेस्टमेंट अब तक हो चुका है पी फंड की तरफ से, क्रूड ऑयल के एक्सप्लोरेशन में, पाइपलाइन में, अलग अलग चीजों में, और ये वर्ल्ड वाइड हो रहा है। सो क्रूड का जो आगे का फ्यूचर बनता हुआ मुझे दिख रहा है वो डाउन द लाइन 2-3 ईयर्स ये बिल्कुल घट के $60-70 में बिकेगा। तो क्रूड की वजह से जो लोग डरे हुए हैं उनको डर छोड़ देना चाहिए। 1-2 साल के बाद ये खत्म हो जाएगा, क्योंकि कैपेसिटी एक्सपेंशन आ रहा है, और वो एक बार आता है तो फिर बहुत लंबे समय तक चलता है। और इस समय है इसलिए नहीं क्योंकि लास्ट 5-7 साल में कुछ हुआ नहीं था। तो क्रूड को लेकर के बहुत डरने परेशान होने की जरूरत नहीं है। रिटेल इन्वेस्टर को इस थ्योरी को समझते हुए मुझे लगता है कि 1-2 सेक्टर बहुत अच्छे हैं, जैसे आईटी मुझे बहुत ही प्रॉमिसिंग सेक्टर लगता है, उस पर ध्यान देना चाहिए। और रिटेल इन्वेस्टर को रोज सुबह उठ के एसजीएक्स निफ्टी देखने की बिल्कुल जरूरत नहीं है। वो अच्छे स्टॉक देखे वैल्यूएशन पे, 2019 से कंपेयर कर ले वैल्यूएशन, उसको कंफर्ट दिखेगा। कुछ लोगों को लगे 19 वाला वैल्यूएशन अभी भी ओवरबॉट जोन पे महंगा दिख रहा है, तो जो बैलेंस शीट का साइज बढ़ा है ना 2 सालों में, उसको भी आपको अपने अकाउंटिंग में लेना पड़ेगा। उस लिहाज से आप देखेंगे तो आपको फिर वो अट्रैक्टिव लगेंगे और होल्डिंग पीरियड आपको समझ में आएगी। तो मेरी सलाह सिर्फ स्मॉल इन्वेस्टर्स के लिए ये है कि वो इन सेक्टर्स पर ध्यान दें। क्रूड के बढ़ने से आईटी को और फायदा होता है, ये मैंने आपको बताया। और डाउन द लाइन 2-3 ईयर्स क्रूड के प्राइसेस सिग्निफिकेंटली नीचे आएंगे तो भारत के लिए अपने आप नई स्टोरी डेवलप होगी। तो रिटेल इन्वेस्टर को घबराने की बिल्कुल जरूरत नहीं है। आप अपना इन्वेस्टमेंट एसआईपी के थ्रू जो चल रहा है स्टॉक में या म्यूचुअल फंड में, जहां पे भी आपका चल रहा हो, उसको कंटिन्यू रखें, उसको बंद मत करिएगा, क्योंकि ये स्टोरी बहुत जल्द पलटने वाली है।
थैंक यू नीरज भाई। आई थिंक बहुत अच्छे से आपने समझाया, बहुत सरल तरीके से।
गुरमीत, एक्चुअल में नीरज भाई ने चकदे वाला पेप टॉक की है फाइनल मैच से पहले। थैंक यू सर।
Thank you very much. So thank you for coming so late also. Aditya, final lines from you. I've added Arvind sir also, as Meet Bhai told you. Final lines from you, Aditya, and then we'll go to Kshitij and then Arvind sir, and then we'll call it off.
Yeah, so just, India will become a $5 trillion economy, right? We are growing by 8-9%. So this will have a huge multiplier effect on all the listed sectors. And it's just a kind request for everyone to, participate in the wealth creation journey. There are a lot of amazing companies listed here in India, which are amongst the top innovators in the world. And yeah, that's about it. Don't let short-term, gyrations just scare you. Yeah, thank you.
Superb. So $5 trillion का मतलब है मार्केट कैप also at 1:1 ratio GDP to market cap, जो Warren Buffett का formula है.
Absolutely.
Yeah, right. So the same wealth which has been created in so many years will get created whenever we hit 5 trillion, 26, 27, 28. I think वो debate कर सकते हैं. Thanks, Aditya. I think you made that point beautifully. And any last thing, Pragya? Anything you want to add, and we'll just go to.
Thanks for the opportunity, Gurmeet. Just tying up your initial comments on the manufacturing sector, I think $5 trillion economy, there's a lot of push by the government, whether you talk about PLI incentives, the consumer demand being back, the whole China plus one policy, the way Indian exports are looking quite competitive right now. Corporate taxes are very healthy. Corporate balance sheets are deleveraged, looking quite robust. Bank NPLs are down. I think the entire ecosystem is set in place. So it's just a matter of picking picking whatever it is that you're comfortable in, whether it's pharma or metals or some of the tech dominated, logistics industries. We can just pick any theme and roll with it. And, we are also everybody is in the business of finding value and investing. Don't be married to the company. Detachment also has its perks. But ride out whatever these news comes, and we would like to discuss those on Twitter Spaces. There should be something to talk about. So yeah.
Thanks, Arvindji. A couple of minutes, and then we'll wind up, me and Chedich. Keep it short, sir, because it's been too long. We would have wanted to hear you more. Unfortunately, पौने 2 घंटे हो गए, and yeah. So please, anyways, please go ahead, sir.
Yeah, thank you so much, Gurmeet, Meet, and all the hosts for inviting me. I'll just wrap it up that the whole chatter which is around the macros where we are seeing there are headwinds. But I will tell you that there are a lot of tailwinds with respect to India where we are seeing on ground manufacturing of a lot of things improving. I'll just give you a brief background. All inflationary talks that we are now seeing will be a capex, heavy kind of an environment that we'll see. We were just having a talk with the Siemens India head just 2 days ago, and what they were saying that in India also people are preferring more India-made motors now than German-made motors of Siemens, and the trend is also globally. So the inquiries globally of India-made motors is increasing. Yesterday I was at a trade fair in Bangalore where the MDF industry had displayed a lot of the booths where we are seeing a secular trend towards the furniture manufacturing in India. So a lot of these materials which were not being made in India would be made. So I guess we can have a separate talk on that. The time is short, but I can definitely link a lot of macros that I've been talking about to a lot of micro stories which are growing fast. And you look at the enterprise of these entrepreneurs which are there on ground working day and night. It is so heartening to look what the growth we are seeing. Thank you so much for inviting me.
थैंक यू अरविंद जी. एक बार अलग से इस पे करेंगे स्पेस. मैं मीत भाई से बात करके we'll probably spend more time on this. It needs, as you rightly said, इसके लिए अलग से 1 घंटा चाहिए to talk. Your last comments, and then
Gurmeet, I think looking at the number of participants, thank you very much for being such a great listeners. We have so many good learned speaker की पूरे साल का कैलेंडर बुक हो सकता है स्पेस के लिए. Neeraj Bhai is there, Neeraj is there, Aditya, Pragya, Meet Bhai, FI, and we were having a couple of more who left. But I'm saying, my concluding remark is very simple, and Pragya and Aditya, and you also spoke about the 5 trillion story. Eventually, you look at, when you look at the past, the growth at which we have grown, and now at what space we are growing. There's a base effect also. Let's say if we not grow at 7 and we grow at 6 as a real GDP, still your base is 3 trillion on which you are growing. That in itself make a difference. 2 sectors we talked a lot about, and which is healthcare and your technology. Broader markets you look at, the participation is in excess of 28-30% on technology side, and in excess of 16% on healthcare side. In India, it's 19-20% on technology side and 5.5-6% on healthcare side. So there's a lot of scope which is building up. But yes, rightly said by Gurmeet, if one is you understand business, then only you buy. Otherwise, take a fund route. There are a lot of good funds available, or maybe follow those handles which can actually guide you. Overall scheme of things, looks like we are in sweet spot. Whether you talk about the emerging countries, or you talk about the focus of government on the capex plan, or on the growth story. So I think it's a God-given opportunity. There's enough food for everyone. It is just that you have to pick the right choice. There'll be two set of investors sitting next to each other. One must be making money in market, one must be losing money. So money also changes hands. So we need to understand that there is no easy money in the market. All you have to do is just buy those businesses which are generating some cash flows in excess of 12-13%. आप उतना ही कमाओगे जितना बिजनेस कमाएगा, नहीं तो बिजनेस भी स्टॉक मार्केट में लगाना शुरू कर देगा बिजनेस बंद करके. सो ये चीज बहुत एविडेंट होनी चाहिए कि दैट ओवर अ पीरियड ऑफ टाइम आई थिंक कंपाउंडिंग इज व्हाट इज मोर इम्पोर्टेंट. द बेस इफेक्ट ऑफ 14, 15, 16% इज irrelevant. If you have time, you're sorted.
Thanks, Kshitij. I think I wanted to thank everyone who has joined. One last remark from me is that yeah, this is not the only correction. This won't be the last. Thoda balanced approach rakhiye. Kshitij made that point. I think one data which I keep giving in various forum is whenever the 10-year bond inches towards 8%, even the fixed income returns for the next 3 years are 9-10% band, because the cycle tends to peak and it tends to come off. Also, when the yields start falling, when it touches 8 and then it starts coming off over the next 3-4 years, there is a positive multiplier on equity as well. So be very balanced. And sometimes you may get nervous in the market. It's okay sometimes not to do anything. If you're not able to understand that, you're not able to understand specialty chemicals, you're not able to understand how pharma is working, आपको नहीं समझ में आ रहा है कि IT क्यों गिर रहा है interest rate से when companies are debt free, it's okay not to do anything. Just sip the index. So if you have liquidity, you don't know anything to do, start sipping the index. You don't have to apply a lot of brain on that. Secondly, use this opportunity to increase your knowledge. A lot of people invest in latest fads. लोगों ने specialty chemical में पैसा डाल दिया था, thinking as if people are saying this will be the next FMCG. उनको ये भी नहीं पता कि आरती बेंजीन बनाता है और दीपक शायद फिनॉल बनाता है. So get into level 2, level 3 when you research companies. It's very, very important. And जो नहीं समझ में आता है, don't do it, right? And just stay the course. I think few months down the line आपको लगेगा, I know so many friends who said यार कोविड में लगाना चाहिए था 7,500 निफ्टी पे. So these things will always happen. And just stay the course, continue with the process. Yes, if your goal is very nearing you, let's say 3 months, 6 months down the line, you need money, then it's not a great idea to do all of that. That's all we wanted to say. We'll keep coming back to you on more topics. We will. If you have any suggestions to us on any conceptual clarity you want on few topics, we'll be happy. I have a lot of my company colleagues whom I could not add. There was Puneet, Ankush, Mandar. So many of them I could not add. I got a lot of requests from. So I'm currently sitting on 21 requests, and after answering so many. So just tells you that at 10 o'clock, 700 people there, makes us believe that the equity culture in this country is quite bright and vibrant. Thank you very much. Neeraj bhai, one last anything from you, and then we can just close this. Neeraj bhai?
Are you asking me?
Yeah, I'm saying any last thing, and then we'll call it a day, sir, or a night.
No, sure. Most of the things are being discussed. Lately जो आपने कहा कि अगर आपको कोई चीज समझ में नहीं आती है तो आप थोड़े टाइम के लिए अवॉइड कर सकते हैं उसको. लेकिन मुझे सिर्फ ये लगता है कि अगर आप अच्छी क्वालिटी में इन्वेस्ट करते हैं तो आपका ड्यूरेशन बढ़ सकता है, लॉस नहीं होगा, ये मेरे को मालूम है. तो इसलिए कोई बहुत चिंता करने की जरूरत नहीं है. थैंक यू सर.
Thank you everyone, guys. Good night, and we will keep coming back. We have got a lot of DMs. We will try and respond to it. Thank you, Meet bhai. Thank you everyone. Pragya, Arvind, Aditya, Kshitij, FI.
Good night, everyone. Good night.
Yeah. Thank you so much, everyone. Thank you so much.
My pleasure. Thank you so much. Thank you.